Welcome, guys, to SideHustle Favor by Motions, one of the best masterclass about forex trading, where we'll be giving you strategies, full education, and we'll be talking about almost everything. And guess what? Today I put best content, and we'll be trading. How to trade the market. We'll also be doing it technically with you, so that you guys can understand what is happening through the market, even if a beginner, whether you're intermediate trader, whether you are advanced trader. So this is still for you. Stay back, relax, make sure you subscribe, make sure you also comment, so that we know what content you like, so we can keep on feeding you what you like. Don't hesitate to ask us questions where you don't understand for more clarity. And that's what we'll be doing today. So with waste of your time, today our table of content is going to be straightforward. So I'll be actually helping you how you can actually understand, how the market maker works, right? The market maker circles, or how, they generate liquidity in the markets. Those consolidations or accumulation. Let me quickly present my screen. So, guys, this is going to be very interesting. We're going to be learning a lot today. So that's what I love. And let's say, for example, if you pay attention to the market, right? It loves to do what we call consolidation or accumulation, just ranging in one place on the same point. So we know that this happens most of the time. So once you know how to identify this, then you know that you'll be able to know where the market can actually go, right? So it's going to be very easy, guys. So, and we're going to also explore the trading time, right? You don't trade every time. You don't trade any time, right? You need to know what specific times, you need to trade. What happens during those times, right? Because we do have London session, that is happening, and I love trading it in the morning at 10 a.m. South Africa time. So, but you need to understand what are those sessions taking place. Most of the time, you can just go to my FX group and just check what is the next session taking place, when is the market opening, when is the market closing for that session. That will give you more clarity on what you can expect, the volatility that will be taking place, when to trade. Because I always say, guys, as far as forex, you need to know what is it, how to trade it, when to trade it, where to trade it, and who, right? So once you know all those things, you are good to go. So that will be a focus today into trading. The times will be knowing, okay, at this time is what we call the stop hunt that is taking place. That's what they do most of the time. They give you a stop hunt at a particular time, so that, at that time you'll be confused. The aim is to make sure that, they get you confused all the time. But with this course, it will also open your eyes so that you can avoid all this confusion, and you can stick to your time frame, you can stick to your strategy, and stick to all what you have to look for. First, I talked about accumulation. Secondly, I talked about the time when to trade in the market. So now we're going to also talk about how you can profit from the circles, right? How can you make money out of the circles, right? So obviously, you have to have a profitable short trade. So I teach you to target 50 pips in a day on currencies, and that is 500 pips on stocks, which is your Nasdaq and US 30. So that is a lot of money, guys. So imagine each and every day you can be, first you can be consistent in chasing 50 pips to 100 pips every single day. So now, if you check in the trading market, it happens all the time, right? Here is your accumulation, here is your consolidation. So what I'm teaching you is to be able to see, oh, this is a consolidation taking place. Then quickly, you know where the market will go, right? Because if you can check, this was my previous analysis where I was just marking, and but it did exactly, as we said it would do. based on this strategy. So this will also help you guys stay in a long, term trading, be a profitable long trader that has long-term trades that are still successful. So in this next step, by the way, this you need to know that forex is risky, and that is a lot that is taking place, because in order to be a man, you gotta be you gotta be that man that you want to be. But my advice is that be patient. Of course, this may seem like it's a bit easier, and it's easier said than done. And when it comes to trading, right? So make sure that in trading forex or otherwise, you understand the zero-sum game, right? Which, there is a weaker retail traders that are positioned against the, multi-bank traders in institutional professionals, right? Because now, this is the game of the wolves, this is the game of the whales, this is the game as well of the sardines, which are small fishes, right? And so you need to know that who are the role players in this market, right? So although we know that there are role players in the market, I think the first video where I told you who are trading forex, right? So today we're going to go straight into the strategy. So stay tuned to the end and then understand all this what we're going to talk about, right? So you see in forex, guys, there is no trading floor, right? There is no accurate measure to open a volume. You can simply, target any volume that you want, and simply no way to tell you how all these institutional traders are positioned from themselves, and how much they trade with, what volumes that they trade with. So all of those, right? So, but how did we get here? How did we end up getting here, right? Because now although this seems like it was yesterday, right? So, but my journey, guys, began 4 years ago in forex trading. It's actually my fifth year, right, in forex trading. And what I can say is I've learned a lot, right? I've learned to understand the rhythm of the market, to understand what the market is saying to me, and to know, and through my intuition as well, that this is the way the market may be, right? Because of I've studied the strategy, I've filled in it until I've mastered it, understood each and every candlestick, understood each and every spike. Because now all this it tells you something. All these spikes, it tells you something, right? You need to understand almost everything. So I know you can do this, and of course we can do this by reaching our target. We can, if we understand this, we can actually reach our target very sooner, guys. Very sooner. The good thing is we've got a mentor here who's willing to take you through, right? So I'm providing you guys this extraordinary, unique opportunity to study how the market makers work, how the market works, right? How the bankers operate, right? So I'm preparing you guys to beat this market, to beat this man you see here. I'm preparing you guys to beat the beast in this market. So I had to first learn from me, right? From actually the market straight away, from my mentor straight away. And what I can tell you is that if you can just look at the charts and study them yourself, you can even understand how the market operates, right? Just look every detail, spike to spike, how the candle closed. There's no way that you wouldn't understand, right? So somewhere, somehow, you're gonna get it. Oh, okay, this is how it works, right? So I'm ready to share this knowledge with you, and I don't want you to hand it over a dime of your hard-earned money to the tricks and manipulations of these news dealers. There's just a lot in forex trading, right? So that's why I'm willing to give it for free, right? So, and however, let's get started. Let me go to the drawing book. So we're going to start by the first cycle. The first cycle of all. I don't know if you ever had that in in forex trading. Yes, good. Otherwise, I'll tell you what is it in forex trading, right? Otherwise, someone will tell you it doesn't exist. It does exist. Forex market is too big. It's too big, guys. And here we're trading over 7 trillion of dollars every single day, right? You can imagine how big it is. So I'm here to tell you otherwise that there are small elite group of traders that do it, in fact, and how they do manipulate the market in some sort. In fact, they do control how the market will play out on a given day, right? So, but the beauty of what I'm about to share with you, it will boil all down, right? These manipulations are visible on the chat, to the to trading.I, but sometimes you also see the brokers as well, doing all these manipulations, causing them there. But with this strategy, right? Once you see their behaviors, you'll start understanding, what they mean, right? You'll be able to trade like a market maker. You'll be able to trade like a guru. Or you'll be able to trade like someone who already understands the rhythm of the market, right? So here I talked about the consolidation, which is the accumulation phase, right? So, which simply means that, let me wrap this off. Which simply means that that is where, the market is just accumulating, and then there's a lot of money through accumulation. Because someone buys here thinking, oh my god, this is gonna go up, and the market just goes down again, and then someone maybe sold here, and then now the market bought here, and then it's just up and down. So there's no going on. It's just the price standing on the same place. So we need to understand that this is our phase one. We're going to understand it as phase one, so that we're going to break everything down first. Our phase one is accumulation, which is this range. Market just accumulates. Market just moving on the same place. So this, now you need to also understand, when does it take place? When does this accumulation phase take place, right? So there is a set time or session that this actually takes place in the market. So most of the time you find that it happens during 5 p.m. 5 p.m. Eastern time. So you need to check this. 5 p.m. Eastern time and convert it to your country time. EST. 5 p.m. Eastern time, right? So they just do the high and low, and they're just doing their research, right? Up high and low, high and low. So now what happens is that when the price comes in the market, when the price comes in, now the market makers, what they do is they make a quick push up by 15 to 25 pips, right? This is after accumulation phase, right? We talked about phase one. Now we also talk about what they do after that, right? So here is what I mean: accumulation, and then you see them doing what we call push to the up, right? Push to the up with at least 15 pips. Obviously, they're going to break the structure. Let me wrap this so you can see clearly. But I hope you're taking notes, guys, because this is going to be very serious. So this is like your accumulation. They're moving on the same place, ranging. Now, what they do is that, obviously, just do a little pushback to the upside, right? So after this breakout of this step, what they normally do is that they test on that level or on the previous low, and they start going up, right? Breaking the structure. Now they know they're running away with the liquidity now, right? So, or other accumulation range that they took the money from other traders there. So, according to this strategy, this is our phase one. So here we're looking at the market moving in different levels, right? So this would be our second one. and keep going up. So you find that this movement, okay, just this little push to the upward, whatever, if it's the stop hunt, right? If it's a stop hunt, it's just 15 to 25 pips, guys. 15 to 25 pips. Right? So why would they do this? You need to ask yourself, why would they do this? Why did they do a smaller accumulation and start pulling up, right? Or to whatever direction they're pulling up, 15 to 25 pips. Why are they doing this? You need to understand that when they start pushing up, right? When they start pushing this up, right? You're a buyer, right? You're a buyer, and they sell to you. It's like you are buying, but they sell to you, right? So, and then when they push down, you're a seller, and then they'll buy from you, right? So they are accumulating contracts and building up, what we call the volume. So at the end of the day, you find that there was actually nothing at all, right? Because of what they do is that they're just being smart. They're just playing smart, right? So I know sometimes some people would say that have you ever heard of 1 hour or 4 hour or daily trade in the direction of a trend? Why doesn't the trend following work, right? So I know, guys, because of a lot of people, they just take what is in the textbook as like technically as it is, apply
It's
it as
12
their
o'clock.
final strategy instead of exploring other different strategies and have 5 confirmation at the same time. But here on the strategy, it's all that in one, right? It's everything in one. So that's what I love about it. You don't need to worry about other strategies, the trend line. You don't need to know all of those things because at some point they don't really work out, right? So it's not about the trend, guys. It's not about the trend. It's not about the trend. It's about the money, right? They are following the money. They want the money. They just want the money, right? It's about the money. It's not about the trend. You see, so that's why they're causing all this accumulation because they are after the money. Remember, these are people at the end of the day. They're like, okay, we're going to work. This is let's say maybe during London session, which is our 10 a.m. South African time. They'll be open. On in the during that London session, it's like they're going to work. They're going to work, right? Differently, when they get to work, they've got their targets. They need to produce targets at the end of the day. How much they made, and during that session, how much do they make, right? So if let's say maybe they did accumulation, they know maybe you're going to also get it right very fast. And what do they do after that? They just want to run away from you with a fast and aggressive move. You see, so understand all this, what they are doing, and all the market makers, all they do is that they wait for your money, right? They wait for the money to build up during this accumulation phase that you see here, right? And then once they are done building up this accumulation that you see here, right? Those are contracts. Contracts, I mean, people are just buying and selling. People are active here. This is activity, right? These are people positions, So, but what can we say? So, like I said, all the market makers, what they do is wait for the money to build up during this accumulation phase and see where the contracts accumulated. They see everything. These people can see this your stop loss. They can see, your money, how much you have into your everything. So, but at the end of the day, is to take that money from you that you can make more and end up taking it all. So as long as you are smart, you follow this law, you follow this strategy, you take each and every thing consciously and say, okay, this is my trading plan, and I'm going to follow the steps. Right? Trust me, you won't make anything wrong. You won't make anything wrong. So, like I said, this during this accumulation, let's say maybe they have over $3 trillion in a long holders, trade. So that is like, and maybe $1 trillion in the short sellers. So guess about it. I mean, try to think about it in a deeper. So guess who's getting punished today, right? Who's getting punished? The long holders. It's simple, guys. It has nothing to do with the hour time frame, 4 hour time frame, which is very pointed on, sometimes which way it's going. So it's where the dollar is, right? I told you it's about money. It's where the dollar volume is built up, and then they can do the most damage thing, right? Collect all the contracts that they see here in the trading platform, and you need to also pay attention to this time as well. So sometimes between 1 a.m. Eastern time and 4 a.m. Eastern time, they'll break out of this Asian range in 3 swipes. In 3 swipes, they just break out from that, Asian time. So look at this, right? So imagine with just that session, wiping it up just by going different positions. They'll quickly change the high of the day, right? Settle in and work it out for 30 to 90 minutes, wasting your time, right? Of course, this would just, 30 to 90 minutes, that's mid time frame. That's like an hour and 30 minutes, wasting your time. So you pay attention to this time, that is like 1 a.m. Eastern time and 4 a.m. Eastern time. That's when they break out of the Asian range in 3 swaps. They quickly change the half of the day, like I said, and settle in and waste your time, right? 30 to 90 minutes. The reason they use the number 3 is because of they know we are stubborn, right? They know we are very stubborn, right? Because now, if you check, what they would do is, let's say if this is the higher high, they'll break from that high of the day, right? Create a new high, which is this one, and once they created the new high, they can even go back just to a little bit, take out the people who already bought or sold from this level. Because now the idea is, a lot of people think when the market is high, we can then sell, right? So someone sold on this level, and what do? They kept in there, continue going up. Because remember, it's always hard to form the new higher high, right? So they quickly do this, and you see them coming back. So now we go for it to break this price completely, right? But as a trader, I'm teaching you this because once they hit you once, they hit you twice, right? So they hit you third time. That is like a confirmation. On the third time, that is like a confirmation. So normally that's when I start somewhere here and go all the way down there. So when they reverse, they make sure that there is a curtain. So you need to check for your M and W's. At the top, you look for your M30. At the bottom, that's when you look for your W30. So this guys is easy. These things is I'm going to teach you how you're going to focus on it very step by step each and every single day until you get it right? So let me wrap this and tell you how they do this. Like I told you guys, the aim is to take away the money. Okay, so let's say for example, let's take it as if like we are down, we're trying to go up, right? So what they normally do is first maybe there'll be um, excuse me, marker. So we talked about accumulation that is happening, right? And then they break it out. We break it up. Remember, I talked about 1 a.m. in Eastern Time where I said they'll push it a little bit up, right? So once they break out of that Asian range, what they do is they'll come back, right, from that. And this time, after that, they do what? They'll hit again. They'll hit it again because they know, okay, there are people who are trapped here. The aim is to follow the mind, to take away your mind, right? After this accumulation, they know there are people who are trapped here, who are looking for a step. And sometimes even worse, someone as well went entered here for a buy, they just went back down, right? So back to the consolidation. It's like they didn't move, they wasted their time. This is like how much? 30 to 90 minutes to do my writing. Let me just not write it close. So I say here, what they do is they waste your time, right? They'll put it in the half the day, right? And then they settle it. Work it out for how many? 30 to 90 minutes. Right. So now, what do they do this second first on the second part? Is somewhere here. What they will do is they will repeat it again. Right? They will repeat it again. And this time, once they hit it again, remember now, sometimes even Western just love doing consolidation here, right? And then that's like, remember wasting your time, and then hit it again. So when they hit it again, the aim is to take out, right? Is to take out people who already entered here. Is to take the people who are right about the position, and the retail traders who just following in the trend and trading based on their technical analysis, right? So now think about it. I sold from this level thinking, oh my God, this is going to be a long sell. So now what they do is consolidate. It's like they didn't move at all because now this is waste of your time, because if you check, it's still on the same point, right? So imagine the time, right? And then now they start consolidating again. So when they hit them out, the plan is to take this out. The person who sold from this level, right? Because now you sold the stop loss somewhere here, they come back, put you out on this level, create a new high. And normally they love to make this spike. I always talk about this candle that we love so much somewhere here, if you pay attention to it. It's the biggest spike. So this spike is made to collect the liquidity that is there, right? To take out the money that is there. People who already entered from this level, the buyers who are not sure about the positions, so they take them out with this stop loss. With this candle spike, right? And then they close, right? Continue going down. So you're like, what's happening? You think, oh my God, am I missing something? Now, yeah, you're thinking, oh my God, I'm going down, right? I'm going down, I'm eating money now. So what do they do? So at that time, this will be somewhere around 3:30 South African time, right? They hit you again with a stop high. Created a new high. 3 times, remember? They're hitting you 3 times. So you thought, oh, it's ready. I've sold somewhere here. And now what they do to you? They say, no, this is not yet ready. They hit you 2 times, right? On the second time, you're already out. You're like, man, I know this myself. What am I doing wrong? Maybe even worse, somewhere here, because of you saw that, okay, this was a sell. You didn't enter here. You took it out. Maybe you're trying your luck to sell somewhere here in the middle, trying to change the trend. What do? They come back, go up, right? So it's just to confuse you. It's to confuse you so that when they are ready to move, you'll be dried out. You won't have any money, to trade anymore. You even be more confused and take the wrong direction. That's what they want, right? Hit you 3 times, and what they do on the 3rd time. Once they hit you on the 3rd time, and you finally get excited and you're giving in that you were wrong, right? And most of the time they suit your direction. Now you've changed in the wrong direction, which is their first breakout, of the Asian channel. So the aim here is to get you recommit your money and the other way. So what happens when they break out of the range? So once they break out of the range, there's a trigger. There's a trigger that the stops on which short sellers, these people, they need to put their stop loss on the other side of the Asian range. People who put their stops maybe 7 pips below the candle, sometimes, they just quickly grab it. So that's all garbage, guys. They will hit you, they will hit you, they will hit you, and they will hit you again. So once they do that, they will cancel out this volume, right? And then they get those traders to recommit their funds again for long, right? And once they think that, okay, market is going up, we are long now, so what do they do? So now let me give you an example, guys. Let's say, for example, there's a half of people, right? And they come back in, and the $3 trillion has now become maybe $3.5 trillion long, right? So what is the goal of the market movement now? Think about it. It's very simple, guys, to get that money. That's your goal. How do they get that? How do they do that? There's just a lot of people that trade, some patterns, your Fibonacci extensions. When the market makers make that pullback, they make one more pass towards the high of the day. Like I'm showing you here, a little pass from the high of the day, right? Just to grab the people who are here, who are under here. Someone who sold here on this level when they saw the spike, they put the stop loss maybe somewhere here. So already they're taking them out with the spike and then going back to their direction. That is the pullback. So some people, you find that they just put some pending orders right above the high, right? So, and sometimes you find that they're not even activated, and because once they get you, the first important thing is that they open a spread, right? So you find that spread that they have opened or slippage, so it's even more, because now once you, let's say, try to sell here, maybe they put you here, right, because of that spread. So the aim is to make sure that you're confused at the time and you don't get a better position. Imagine all those people who are trending the trend lines, because now you think, okay, this is like your M, right? It's ready to trade. You go here with a bigger lot size, you blow all your accounts. Now you're going to look for another money. And by then, maybe the market, is taking a direction. You are right all along. But the aim is not saying right, is to confuse the right person, take away the money from that right person. You see, that is their job. The job of the market maker is to go to the high, open the spread, trigger the pending orders, right? So once they trigger those pending orders and they validate, all these patterns that can be found in this picture. So when they fire those pending orders, what happens? All of those pattern traders, they are now stuck. They are now stuck. Because now someone says, okay, this is a buy stop, I can just put a buy stop pending order here. So that when the market continues going up, it can just activate and continue going up. But what they do a little feedback to the downside. And then remember, guys, that once they quickly pull off of the high of the day, now we're chasing 25 to 50 pips, right? Because I told you guys here, let me write this so don't forget. These are notes are important. So here we talked about movement being 15 pips, right? With their stop hand. Pips, that's the movement, the stop hand. So now they're pulling off from the high of the day. They're breaking down from this level. Right now they formed your air. Very nice, isn't it? So they what? They break out. Coming back to the test here, which is your first leg. Your first leg structure, right? So they break that leg, come back retest, impulse correction, right? And then another one. So now you need to pay attention to the downside, right? This is your two, your third, right? The whole aim is to target this whole movement. That is where the money is. So here we're talking about 25 pips. But with this is for currencies, right? So with stocks, it's going to be more. With you guys, it's going to be more. It's going to be 500 with industry, right? So this movement here going down, here is changing. You got 25 to 50 pips. In USA, it's 500 pips. In Nasdaq, it's 500 pips. So who doesn't want this pips? That's why I'm saying I'm teaching you to chase this 50 pips movement, and you're out of the market. You're out of the market. So when they get here, they do the same thing, right? So here's your third leg. Once they are done doing your third leg, they need to create a W, right? They need to create the W, but obviously they also still need to waste your time, right? So now let's go to stop hand phase 2. So I hope you got it. I hope you got it. This was your accumulation. So I even told you the time when does that take place. So let's do a quick review very fast, right? I'm not going to waste too much time. So just want you to take most important key takeaways, right? So we talked about the accumulation. accumulation phase. And now through this accumulation phase, we talked about, how they're causing all these manipulations to make sure that, you don't stay focused. So I told you this accumulation phase take place during 5 p.m. Eastern time. That's when the high and low are reset. Right? So here when they make a quick little push back, so that's where 15 to 25 pips. So they make this quick pullback, guys. I told you because of they want to do this pullback, then go to the different side, right, sideways, and then go back again, hit them down for the second time, go down to the side. Why do they do this? Because the produce is the money that we want. They accumulate concepts and building up what we call the volume, right? So, and second, at first phase, here we talk about where they break out from the Asian, range, right? Interest swipes. So interest swipes, this is what one. Interest swipes, that's like, let me draw this. The aim is to quickly change from your direction that you're taking, right? So here we talked about the 1 a.m. Eastern time to 4 a.m. Eastern time. Let me do this. That's when they break out of the Asian range, right? And remember, I told you this is also important. They are wasting your time. They're doing it for 30 to 90 minutes, wasting your time. Right? That is like a stop hand, this movement to the upside. So let me put it somewhere here where you can see it. Right? Because now the real movement is here. Where this is where the money is. They're wasting your time so that once you are confused here, they start going there to the right direction. Right? So I told you guys, those who put the stop loss, 7 p below the candle, all that is just garbage. They'll beat them, and it's nothing too, right? So now they quickly pull off of the high of the day. This is a high of the day. They pull off, and what do? They're running from this. They're running to get this 25 to 50 pips to trap the traders in that circles and hold them there, right? So let's go on to our second figure, which is our stop hand. Stop hand first. I don't know you guys if you have ever maybe taken a trade and maybe been so excited that you're starting to count your money, and maybe sometimes you're projecting that it's going to go to 5, or maybe you take a break, go have a cup of coffee, and when you come back, maybe down deep with money, with dollars, you ask yourself, what the hell just happened? Right? We've all had that time, guys, trust me. We all have that happen to us, right? So the market makers, went to the high, opened the spread, because that's what they do, and triggered all the breakouts. traders, right? The aim is to take out all those people who are trading ABCD patterns, they trigger the Fibonacci traders, and boom, right? So now they've got them stuck in the trend, right? They go into consolidation after this 25 to 50 pips of the high, right? So imagine once they trap you in there, they trade sideways for a few minutes, and what do they start doing? You start begging and pleading, please, it just comes back, I'll get it out, I'll get it, please, price, please come back, I'll just get out. Because now once you're in here, right? So you maybe sold whatever you did, and the market maybe is up here at that time. You pray, oh God, market, please come back, come back, come back. Market is not coming back. Market, please come back. Market is not coming back. So you end up just messing up, you know. So that's their aim, to drain you out. So I've learned my lesson, guys, many times, and I won't do it again. That's what everyone start doing, you know, hoping it comes back. Hope is not a strategy. We are not in the business of hope, right? Then what happens after maybe they consolidate for 60 minutes or so, right? They'll start the trend. They'll start the trend. And then maybe the trend run against the original move, right? So the aim is to make it at the end of the day. Because if now, let's say maybe Asian time, the Asian session closed, giving it to the London session, they need to communicate. London session needs to communicate with the New York one. This is what I did on the previous London session. I did a stop count, and this is where I am. You can go back and do a stop count. You see, so that by then you're thinking, it's 3:30. I'm going to beat the market. I'm going to as well. So by then you didn't even think about all this. You know? So that's how a lot of people just lose out everything. So once they set the high the day of the break, they'll start the channel. And they run trend down to 6 and 8 hours. So this is like running a trend for 6 to 8 hours. Because now if you go the wrong way, guys, it's a nightmare. It's going to be slow, it's going to be relentless, and it's just going to keep going and going and going, you know. So you think maybe it's going to hold, and you start making up stuff in your head and seeing things in the charts that are really even here. Because now imagine you like bought maybe somewhere here because of you saw that this candle closing, it's a continuous one. But at the same time, what they do, they pull off right from that buy direction. They start consolidating, wasting your time. You're praying. Oh my god. By then you're fed up. You're out of the trade before you even know. So that's what they do. That's what they do. So once you pay attention to what they are doing, you never go wrong. It's everywhere, guys. It's everywhere. Look at the previous chart. Maybe if you look at the previous, you'll understand what I'm talking about. This consolidation, accumulation, that's how they make money. Because if you check all the time, they just keep consolidating, and break out of the jaw. But that's just how it works. Let me ask you something, guys. You've maybe been in a trade that was maybe 100 pips. Maybe by then, maybe 3 to 4 p.m., it's only up by 60 pips. You know what? Because they pulled off from the high. That's what they do. They don't want to start from zero, guys. Market makers want to leave the volume track for tomorrow. So they don't have to start from zero. They can just continue grabbing liquidity, hitting the stop loss. I mean, if you had this type of a control, wouldn't you do this? I'll do that. How can you profit from this market cycles? Understanding this cycle, guys, is going to give you a major edge in your trading. Because once you can identify it on the chart, then taking a trade is simple, right? It's second nature even. I know, because you're becoming a profitable trader. So talk to them all the time, how they perform during the high of the day. It's not over until it's over. I also love high times. Take away. You see. I know most of you guys sometimes you told yourself like, if the price comes back on a bad trade, you will simply pick it out, right? Market makers are aware of this, so they come near their previous price or previous levels, but don't break them, right? This is added to the confirmation that you have obtained an extremely entry or excellent entry, So the next step, so what now, right? I challenge you guys to go back and look through your chats. I'm certain by applying, what you've learned in this today, you'll be able to have an immediate improvement into your trades. So as well, please don't hesitate to contact us for this free strategies. We also do hold seminars in Pretoria East, and we left it. So we're going to see you again, guys, in our live thing. And again, our disclaimer, guys, nothing presented in this YouTube channel, right? Either vocally or visually, is to be taken as a trading advice or financial advice, right? All content of the YouTube, it's all for educational purposes only, right? Any trades taken which are influenced in any way by your participation in any of the strategy. So are strictly at your own risk. So you should consult your broker or financial advisor before placing any trade. So guys, otherwise, that's all from my side. And I hope you're going to beat this month. So, but otherwise, like I said, I told you, let me use a different pen. Consolidation. Let's go. Actually, let's go do it because of the market somewhere there. So which time frame can we choose? So the reason why I choose daily one, right? Day 1 time frame. You can see what is your high of the day and the low of the day. Okay, so just underline your high of the day. And guys, for you beginners who don't understand the terms I'm saying, maybe big terms for you guys, don't worry, we're gonna go through our clothes and we're going to do it together, right? So Actually, I don't like theory, but I love being practical, but as well, I try to balance, right? This is also important for you beginners to understand theory on their own. What is a pip when you say it's a pip? When we say accumulation. But so far, I'm sure you guys understand that. I'm very patient in explaining. So the reason why I'm doing all that because I want to help you guys understand all this. So let's do it again. So we underlining here, right? Remember at some point, this was your high of the day. Let's put it here. You see this? This was your high of the day. So I said accumulation. Because here we check, it's a day one, right? Daily candle. Day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Come back on the same level. 11, 12, 13, 14, 15, 16. Come back on the same level. So you see, this was just accumulating this level. It's accumulating, going back and up. Para panyo. You see. So, but before that, if you check, before this, or after it, because now if I check about you should do for this phase is one. Phase one, accumulation. That's why they arrange on the same thing, wasting the time without taking any. We talked about this. Let's go back to our note. Talked about it. This is your accumulation. Right? Told you that they will waste 30 to 90 minutes of your time, right? And before going up to your direction, right? We talk about accumulation being 5 p.m. Eastern time, right? And then from then, they will quickly pull off from, and then from the this even range, right? So we're pulling out from this even range. And what do? They break out from this accumulation. We talk about this. Here is it. Here is it. Here is what we talk about. Here, isn't it? Here is it. And once they come back on that level, they do what? They continue consolidate. This also happens on all time frames, whether it's for day 1 hour, 4 hour. The behavior is the same, right? So I guess if they're using lower time frame, higher time frame, because I feel like shorter time frame changes time moves different. This is what I say. So guys, if you pay attention, you always do. Yeah? And then after that, what they do, look at the notes, right? The consolidation, pull it off, and then still waste a little time by consolidating, which is this one. Right? And then what they do, they go up, forming another leg, right? opening another leg. And this leg this time, like I told you, it will take out this one, right? But someone put a stop loss here, enter the sale. So the aim is to take this person out and then take your money, right? So if you check this candle, it's already crossed. Here's the candle I was talking about that we love doing. Let's go and check the candle. Is this not the candle? Wow. This is the candle, guys. You see? Be careful. This is the candle. We love it too much. You see? So, and then that is your second day, right? And you're thinking, oh my God, are they done or what? Right? Are they done with me or what? Is this the last time? What's happening? What's really going on? Right? So, what's happening is that from then, after doing the second leg, they'll come back and again hit you that time when you're thinking, oh my God, what's happening? You're confused by there. You don't know what to do, right? You want to be out of the trade. You're confusing the wrong trade. The aim is to take you out. The aim is to take you out and pay attention to the minutes. We talked about the time, 1 a.m. to 4 a.m. Eastern time. That's when they break out of the Asian time, right? This is 15 pips movement. 15 pips movement, right? So obviously with the US state, it's going to be just like, let's say maybe 150 pips. Imagine 30 to 90 minutes waste of your time. So this, we are here on the third leg, on the third hit them again. So now they go again, hit them again on the third time, right? Hit them again on the third time. And now I heard that today we've got news. So, no, not today, at least tomorrow. Yeah. Yeah, at least tomorrow. So now what we're waiting for is a Fed, right? So far, this candle sticks that saying they're buying so far, but we don't know until when, if they want to take the new high or what. But what we know is that from here on, after all is done, we are expecting 25 to 50 pips now, right? So we're expecting 25 to 50 pips down. This is the movement we were talking about here. This is the movement we were talking about. And if you check, guys, after this third leg, right? So they need to form a pattern, but they don't break this level this time. No? So they don't break that level. So you can do this one, but they won't break it, right? Maybe maybe some here, maybe this leg, and then, right? So the aim is to catch. Here we need to, be open-minded for many opportunities, because we might be looking for a good one. So even week one is confirming that, we need to sell. So we're looking to go here. So now we know where are we actually here. So I can't wait to tell you 50 tips. because that's what I want, right? 50, 25, actually not 50 pips. Remember I said 50% currencies only. This is like, this would be 250 to 500 pips. Because if you check here, it's say it is 100, right? So you can imagine from being here in this point, how much like more than 500 pips. So that would be a big. So now we know once they're gonna go down, but in different range, right? So with expectation to go up again. So guys, without wasting your time, enjoy your money. Let's make the best out of it, and see you soon during the New York session time. So guys, this is from me, Sarah CEO, your best female trader in Africa. And by the way, we've got an upcoming trader fair event summit where I'll also be a keynote speaker, keynote guest speaker in that event, representing all women female traders in Africa. So that is one extraordinary mind, right? This shows and proves that we've been into the industry, being patient, learning, failing, going through all the obstacles, building. The most important thing, guys, I don't want to build, gold givers. I mean, go getters. I want to build gold givers, right? In my community, I've built over 20,000 people. These are tip traders who are into crypto, who are into also forex trading. These are people who wake up each and every single day saying, please, can I get a signal for today? I want to make funds for today. These are investors who are in different, time investment, copy trading, whatever, software trading, because we also are software developers. We make sure that we also, help them with softwares, So you can imagine. So we have beginners as well who are learning forex, who are trying each and every day to wake it up. So guys, that's from me, SideHustle CEO. See you next time. And this time, we'll see you bigger. So big up, we did it. Thank you.